Now, across the stock market these days, there are so many different high-yielding dividend ETFs to choose from, and it's very hard to know, especially if you're in the early days of investing, which ones to buy into. Now, my rule of thumb, especially for newer investors, is to stick with well-diversified covered call style ETFs that offer rather high starting yields, but don't offer as much downside necessarily compared to some of the other names in the highest yielding list. So in this video, I'm going to share with you guys 8 different higher yielding ETFs that I think could be potentially perfect, especially if you're just getting started dividend investing in the higher yielding realm. All these different higher yielding ETFs offer exposure to a major index and are very well diversified, but still, like I mentioned, offer a boatload of cash flow. So if you want to see which 8 high-yielding ETFs I think are worth looking into for a beginner investor, make sure to stick around, drop a like down below, and let's get right into it. If you've been thinking about building passive income with high-yield dividend investing, now is the time to get started because there's never been a better opportunity to build a high-yielding portfolio than right now, and that's because all the amazing high-yield products that are available throughout the markets. Now, I just dropped a brand new ebook. It's everything that I've learned after building a 7-figure dividend portfolio that pays me thousands every single month. Inside this new high-yield investing ebook, we're going to go over how it actually works, the risks, the rewards, sample portfolios, and exactly how you can start collecting income very quickly. Now, my ebook is designed to help you get straight to the point because, to be honest, there is quite a bit to learn about the strategy. So if you want to grab this ebook, it's down below the first link in my description. Now let's get back into the video. Now, like I mentioned during the intro, I think it's very important to build a strong foundation in your portfolio, and if you're trying to build out a portfolio that generates a ton of cash flow, I have absolutely no problem with that, but buying into well-diversified, stable covered call ETFs to sort of hold up the rest of the house is a great idea in my opinion. And then later on, if you want to buy into different names that offer exposure into a single stock, take TSLP, the Curve Yield Premium Strategy TSLY ETF, which offers you exposure to just Tesla. Well, after a strong foundation is built, I have no problem with mixing in some of these other names, but that's just my opinion. And that brings me into the first high-yielding ETF that I definitely think is worth looking into, especially if you're just starting off building out your high-yield portfolio. JEPI, or the JP Morgan Equity Premium Income ETF, is a well-diversified ETF that offers you S&P 500-ish exposure. It's not exactly the S&P 500 inside the portfolio, but lots of overlapping names, but offers you exposure to a ton of different single stocks. And then with that, written out the money S&P 500 index call options allow this ETF to seek to distribute monthly income. Now, the yield for JEPI over the past 12 months is somewhere up around 8%, so we are not necessarily getting into ultra high yield or anything, but still with a stable NAV that JEPI has offered and monthly distributions anywhere from the low 30-cent range upwards to over 50 cents per share per month, makes this ETF a possible good foundational position for your high-yielding portfolio. Another great high-quality one to look into, if you guys haven't already, is JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. This ETF offers Nasdaq 100 exposure, but then with the use of options also offers a ton of income generation. Now, I think that having Nasdaq and or S&P 500 as sort of the base, sort of the foundation of any portfolio, whether it's a growth portfolio or a higher yielding portfolio, you really can't go wrong. And that's just because historically speaking, the Nasdaq and the S&P have both performed very, very well and offer stability in any portfolio. But because this ETF seeks to offer income, it offers around 11 or 12% yield historically, anywhere from 40 cents per share per month upwards of 50, 60 cents per share per month. Now, JEPQ is one of my favorites, one of the best Nasdaq 100 high income ETFs across the entire market, but that was up until recently when different new Nasdaq 100 high income ETFs came out, which I'm going to share with you guys in a second which ones those are, and I like those ones even better. Another few solid foundational ETFs to look into depending on what you're looking for. All these different ETFs might have some similar holdings, but again, they're all going to have their own individual strategies, which are going to make them different from one another. Which, as a side note, if you guys want to see me dig really deep into any one of these names, I make videos on my channel all the time where we basically uncover all there is to know about high-yielding names like these ETFs and others, so check out some of my other videos. But another one worth looking into is QYLD, or the S&P 500 covered call ETF, an ETF that's been around for quite some time. It started trading in 2013. This ETF, you guessed it, offers S&P 500 exposure through a high income strategy, utilizing a call option strategy once again. The yield and distribution rate for this one is not bad whatsoever, almost a 12% distribution rate and around a 14% trailing 12-month distribution rate. With QYLD monthly distributions, which have been pretty nice since inception, and a total return which also hasn't been all that horrible either. There's tons of S&P 500 high income ETFs across the market, so once again, I want you guys to look through some of the best ones on your own and figure out which one offers exactly what you're looking for, but yet again, a really good one worth looking into. Now, next we have to include QYLD, the Nasdaq 100 covered call ETF, one of the original Nasdaq 100 high income ETFs. Not my favorite by any means, but still an ETF that has offered roughly 8% as far as returns go annualized, or as far as total return goes, around 140%. Now, QYLD offers Nasdaq 100 exposure, once again, just like some of the others, but through a high income strategy, offers you anywhere from say 12% to 14% yield, depending on what time frame you're looking at. Now, to get into a few of my favorites, the Goldman Sachs Nasdaq 100 Premium Income ETF, or JEPIQ. This ETF also offers, you guessed it, Nasdaq 100 exposure through a high income strategy, but does so a little bit differently. And even though I'm not attempting to dig deep into any one of these names on this specific video, which I do in other videos, this ETF offers very unique exposure, which dynamically sells call options, allowing for upside depending on what happens in the market, which can definitely help when the Nasdaq 100 goes green. As far as income goes for this one, we're talking a 10.39% yield, so not bad whatsoever. And like I mentioned a second ago, this ETF specifically has a lot more upside than some of the others. JEPIQ's brother or sister, JEPIX, is also an ETF worth looking into if you do want high yield and you want it now. The Goldman Sachs S&P 500 Premium Income ETF offers upside when it comes to the S&P 500 because it also dynamically sells call options, but also offers an 8 or 9% yield with monthly income, which has been pretty consistent. Another ETF very much so worth looking into, definitely look into JEPIX. The last two ETFs that are definitely worth looking into, and I would 100% add to your watch list if you're just getting started off when it comes to high yield investing. QQQY, the NEOS Nasdaq 100 high income ETF, one of my all-time favorites as of right now when it comes to Nasdaq 100 exposure through a high income strategy. This is why I'm a huge fan of this ETF because, like I've said before, and I'll say it again, it offers basically everything I personally am looking for as an investor. It says the NEOS Nasdaq 100 High Income ETF, the fund, seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation. Now, some investors out there are looking for massive equity appreciation. Some investors out there are only focused on investments that are tax efficient, and some investors out there, like myself, are looking for some high monthly income. Now, this ETF offers high monthly income that is relatively tax efficient, which I'm going to share with you how in a second here, but also the potential for some upside, which is also great, but not necessarily my first thing I'm trying to solve for. Now, last but not least, SPYI offering S&P 500 exposure also through a high income strategy, which these two NEOS funds, QQQY and SPYI, are two of my favorites and two positions I'm looking to build out extensively over the next year. So I hope you guys got some decent ideas as far as researching goes when it comes to good, stable, foundational positions for your high yielding portfolio. Like I said, I absolutely have no problem with adding in some other riskier single stock ETF positions that offer exposure just to maybe a single name or two, but I do think it's important to build a strong foundation, and that's just because the S&P 500 and the Nasdaq 100 have both been very tried and true since inception. But before I go, I do have a question for you guys down below. When it comes to high yield investing, what is your #1 favorite ETF you're adding as of right now to your long-term portfolio? Drop the ticker symbol in my comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.